Cool. Let me say welcome to everybody listening today to our Zephyr webinar. We really appreciate your time. We've had a lot of registered brokers that have signed up for this, so it's fantastic that it's proved so popular. And if you're still signing in, that's fine. Just join in, and that's great. It's been really popular, so I do hope it's interesting and useful for you. A little bit of housekeeping. We've got your mics and cameras turned off, so we can't see or hear you. If you can't see or hear us, you've got a problem. In that case, please do like dial off and dial back in again. We are actually recording the session, so there might be a chance for us to get it out to people afterwards if they really want it. Not necessarily planning on doing that, but get in touch if you want to see a copy, and one of my team can hopefully get it logged onto YouTube or something. Do use the chat comments. That is open and live. We've got a number of questions in already about the topic about Zephyr and the topic of specialist lending, particularly about criteria and underwriting and some good stuff there. But we've got time baked in for more questions, so please do use the chat, add some comments and thoughts, and we'll keep an eye out. We're aiming for 30 minutes. It's a punchy agenda. If we go slightly on and people want to stay, that's great. And without further ado, let's just do some introductions. I'm Tim Newman from marketing at Zephyr. I'm just here today to keep things ticking over and to keep Elliot and Liam to time, really. But really, the two main guys here are Liam Cooper, our telephone business development manager, and Elliot Newey, our regional sales manager, both from the North Wales and Northern Ireland region. So if you're a broker based sort of from Sheffield upwards, these are the guys that you want to be speaking to about your cases. I'm going to hand over to Elliot now, who's going to take us through a few slides about Zephyr. You can see the agenda there, and I know Liam's got a number of questions already prepped from brokers that you guys have been sending them in. Thanks for that. So yeah, over to you guys.
Good morning, guys. And may I start by saying Happy New Year, if Happy New Year is still relevant to you. It's always a difficult one. When do you stop saying Happy New Year? So the purpose of today's presentation is to give you a quick rundown to who Zephyr are, to what we're looking for in the specialist space from a client profile, but also from an underwriting perspective, to give you an understanding to how you can get your cases through more efficiently, more timely, and this will not just help Zephyr, but help the various brands that you use from an underwriting perspective. Getting straight into who Zephyr are. So Zephyr have been around for just over 3 years, and in fact, we celebrated our 3rd year anniversary just before Christmas. So Zephyr is a buy-to-let lender, and we're here for your individual and SPV type of client, as well as your portfolio type of client as well. We are here to deliver a first-class service, provide our expertise, but also make things more efficient in an industry which we all know can sometimes cause backlogs. Zephyr belongs to our overall parent company called Computershare, just to kind of put some context to Zephyr. So Computershare is a business which has been around since 1970s. It was originally floated on the Australian stock market, and we currently have 12,000 staff worldwide, and it's currently valued at 12 billion Australian dollars. In terms of more prominently Zephyr, or the trading style of Topaz Finance. Topaz Finance, as part of the UK Finance website, which is available for all to visit. Topaz is the 15th largest lender, and in fact the 10th largest buy-to-let lender, just to put some context in terms of our expertise. The overall book that we're looking after is circa 43 billion. So again, a good insight to where we sit in the market. We also have a sister company, which is the Deposit Protection Scheme, or the DPS, as you might note, which we administer tenant deposits on behalf of the government scheme. And at any one time, it's around about 1.8 million worth of tenant deposits that we hold. Getting more into Zephyr itself and what we're looking to lend on, who we're looking to lend to. So from a property perspective, we are there for a whole range of property types, from your houses and your standard flats to your houses and multi-occupation, your multi-unit freehold blocks, and your flats above commercial, to name but a few. We then go into your extra local authority and your deck access, which is a typical southern type of local authority type of property, as well as we're in the new build market. And all the properties that Zephyr is looking to lend on is based in England, Wales. At this moment in time, we're not lending in Scotland. And being more specific in terms of the specialist properties of your HMOs and your multi-unit free blocks. Each type of property, we're allowing 6 bedrooms for a HMO or 6 units for a multi-unit freehold block. So again, it gives you the context of the size of the property that we're in the market for at present. Value of assets we're looking for from a standard type of point of view is £75,000. For your more specialist, you're looking at £100,000. And the minimum loan size that Zephyr can facilitate is £50,000. In terms of the type of customer we're looking for, we are looking for your standalone SPV and your individual private type of client. Each time we can lend up to 4 directors or 4 individuals, depending on how your client wants to do business. We are there for a minimum age of clients at 21 years of age, and we can lend up until the end of the mortgage term of 95 years old. So again, a whole range of ages, whether it's someone looking to be a first-time landlord or whether it's a client who's planning for the future. So again, a whole range of the abilities to lend. SPV applications, as I touched upon, we're looking for that standalone type of business. So when I say that, we're not looking at your parent company or subsidiary type of business. It's an SPV which is designed for the property and letting, therefore has the required SIC codes. The shareholding that we're looking for is 60% for your named directors. Any shareholders beyond not being a director, we can also facilitate up to a maximum of 20%. That shareholder does not need to be part of our application. They're not party to any personal guarantees and also not party to any due diligence. Therefore, I must emphasize, it's the directors that we're looking to do the checks and the underwriter on. From a portfolio perspective, we have the ability to look at small, medium, and large portfolios. We have no background limit surrounding portfolios. Your client, and I emphasize this, your client could have 100 properties, 500 properties. And from our point of view, there is no limit in that size. We can do loans up to a £2 million individual transaction. But actually what we can do at Zephyr is lend your client up to £5 million. And that £5 million could be made up of a couple of properties. It could be made up of 10, 20, 30 properties. We have the ability to allow your client to grow depending on what they view as a transaction and the market they're in for the properties.
Elliot, can I just jump in there? After this seminar finishes, we are going to send out an email follow-up to people with lots of documents on that summarise, a few documents on that summarise all that key stuff there. So don't worry if you didn't write it down. There's also a question come in, Elliot, at that point from Robin. Do you accept intercompany loans for a deposit rather than drawing as a dividend? I just thought I'd jump in there with it rather than wait till the end because you've just talked about that.
Good question, Tim.
It's coming up here.
So it follows on this slide. So what I'll do is I'll touch upon that question now. So in terms of from a deposit aspect, yes, intercompany loans is something which Zephyr can certainly look at. But we must emphasize understanding where the funds are coming from is the crucial aspect to the loan. So we need to understand what the makeup is of that gifting company, should we say, in terms of structure, in terms of does the company have any interest or wanting to have any interest in the property in question? Is there any terms attached to the loan? So that's the makeup of what we're looking for. So as a kind of a broad answer, yes, we can consider intercompany loans, but we need to understand the makeup a bit further. Going back to the start of the slide, so just to kind of delve a little bit deeper into what our criteria looks like and the kind of the highlights from what an underwriter is expecting to come through as well. So when we say we have no minimum income, what we're referring to is if your client has income other than from property rental, then yes, we have no minimum income, but your client must have income from one of the three sources. It must either be from employment, self-employment, and when I say self-employment, it can be from a trade, a profession, or another company which is not the property rental company, or pension. So what we're looking for is customers to have some income, therefore they don't become 100% reliant on the property portfolio to service and to live as well. Top slicing. Top slicing can become slightly complex, can become difficulty. So I always start by saying top slicing, reach out to your telephone business development manager, reach out to your regional sales manager when top slicing is available. What we're looking to achieve in top slicing is not only do we need to have multiple properties come to us at any one time, it then allows properties which may be high yielding to help support a low yielding property. Therefore, it allows multiple transactions with Zephyr. And I must emphasize that top slicing is only available on your standard type of property, but also only available to your individual type of customer. This top slicing model is certainly not available to your specialist type of properties, and it's not available to your SPV client either. The products that we have on offering is a 2-year and a 5-year fixed rate. So the 5-year fixed rate is stressed at pay rate, which may allow your client to achieve more funding compared to the 2-year, which is stressed at pay rate plus 2% or 5.5%, whatever is the highest of that calculation. And from a rate point of view, we're having rates starting at 2.5% from a standard type of property, which is your standard house and flat, and we have rates at 2.74 from a specialist type of property. So therefore, rates at present moment in time are very, very competitive. And as I say, from a 5-year point of view, stressing a pay rate will give your client the opportunity to maybe extract more funding, whatever they choose to do. Touching upon deposits, and I know I've just covered the company loan aspect, but again, deposits can come from various different angles. So gifted deposits from family can certainly be considered. Again, understanding the relationship, understanding what comes attached to the gift. Equity, directors' loans is another type of deposit. And what we're seeing in the present market, individuals are looking to create brand new SPVs and then gifting the SPV or providing a director's loan to the SPV, which certainly can be considered from Zephyr's perspective. From a minor adverse point of view, and I just want to emphasize in terms of the aspect of minor adverse here. So what we're looking for is your client, first and foremost, to be clean for at least the last 6 to 12 months ordinarily. And when I say clean, no missed payments, no defaults for at least the last 6 to 12 months. Beyond that 12 months, what we may consider is reviewing the application, because we do allow manual underwriting here at Zephyr. It's understanding what has happened in the background. Why have they missed one payment, for instance? Does your client know they've missed a payment in the past? Are they going through some particular difficulties with that lender? So there's always a backstory to a particular adverse issue, and it's understanding that and helping Zephyr understand what has happened. Has that been rectified, and has that been put to bed, should we say, in terms of from an adverse point of view? From a capital raising point of view, we are here across the board, whether it be to refurbish properties, whether it's to pull money out of a property for your next venture. We have a whole range of reasons why people want to capital raise. The only reasons that Zephyr will specifically not allow capital raising is to pay any tax bills which remain outstanding, which is to cover any gambling bills which your client may have adversely run up, but also any illegal activity which goes without saying. And to put cases to Zephyr, we have no application fee. So in essence, when you put a case to Zephyr, it costs your client nothing for us to do the underwrite. At that point, once we are happy with the underwrite and we're comfortable of the transaction, at that point we instruct the valuation, who in turn we will start to spend the client's valuation fee. So again, it's a good way of promoting to your client that Zephyr will look at the proposition, will understand the proposition before going to market from a valuation point of view. The products that we offer come with various different aspects of 0 fee to a 2% fee. So when you're talking to your client, understanding what they want out of a product, whether it's rate driven, whether it's no upfront fees, we have various different products to facilitate your client. And the LTVs that we potentially can go up to is 80% for your standard type of properties, 75% for your specialist type of properties as well. And again, the key emphasis of what we're trying to deliver in this market is manual underwriting. Everyone has a story, everyone has a past. Let us understand that story, let us understand that past, and let us engage with you and your clients. So hopefully that gives an insight from a lending criteria from Zephyr's perspective. What I'm keen to emphasize now, guys, is the journey of underwriting. So you guys might be aware of the phrase Campari, and yes, it's an Italian liqueur, which some of you might enjoy a tipple. However, the acronym Campari, from an underwriting point of view, and when I say underwriting, I'm passing on my past experience. In the past 20 years, I've been involved in credit underwriting and ultimately looking at deals from a lender's perspective. What I'm keen to emphasize is how to help you with your journey, not only with Zephyr, but all the lending partners that you support as well, in terms of how can you best get the correct outcome most efficiently and for your client. So when we go through each character, I just want to emphasize part of your knowing your customer journey. Are these the questions that you're asking your client? If not, why? So if we were starting with the letter C for character, do you know the character of your client when you sit down in that first or second meeting with, whether it be a director, whether it be an individual, whether it be a 21-year-old, or whether it be an 89-year-old? Knowing the character of that individual is key for any underwriter to understand whether we should be looking at this transaction. So when I say character, it's along the lines of, what is the track record of that individual? Can you trust that individual in terms of what are they telling you from those meetings? What does their financial background look like? What does the last 6 years look like? Have they had past problems? Have you explored those very minor issues, whether it be a utilities or a telecoms provider? Does your client know what has happened? So these are the aspects that we're trying to emphasize in terms of character. What background and experience does your client have in moving into the buy-to-let sector, or in fact going into the mortgage sector? As I said, because this is not purely around buy-to-let or Zephyr, this is purely the principles of lending. When we look at the ability, so the ability could be the experience factor, it could be a location of a property. Has your client seen the property? Do they understand the market they're getting into? What are their vision? What are their plans for the future? Whether it be a property, multiple properties, their business, their residential home, what are they looking to achieve in the future? Whether it's the short, the medium, or the long-term plans. M for means. What is their ability to service the loan? Do they have management agents? Do they have income? Do they have other people working for them that they're reliant on? What is ultimately the means, and what is the profit or the margin they're looking to extract from the transaction? We move into purpose. What is the purpose of the money that your client is looking for? Is it for that residential transaction? Is it for next investment property? Is it for a nice lavish holiday with their family to reward for what they've done in the past? All these questions become fundamental into knowing your customer and the underwriter understanding the customer through you. The amount of money that anyone wants to extract, again, is that money that they're wanting, is it realistic? Is it affordable? Do they have reason in the amount that they need to ask for? Are they capital raising? As I've touched upon in previous slides, capital raising can come across various different scales, but do you actually know what your client has intent for that money? If it's for future acquisitions, are you involved in helping them with that next property? These are the types of questions that the underwriter will look at. The repayment and the interest aspect becomes more critical from a lender's perspective. So how is the loan going to be repaid through the term? What are the income streams for your client? What guarantees and assurances has your client provided you? But also, have you explained what a lender may look for in terms of guarantees and assurances? Because documentation is a big aspect of questions that we get from a sales point of view. Does a client have to sign a personal guarantee? Is a client liable for the full debt? These are the questions, and these are the aspects you should be explaining to your client. But when we get to I for interest, this is something which the lender will be keen to look at. What is the level of risk are you asking us to support? What is the value of the asset? What is the loan to value? What are the funds to be used for? And once you've collated this information, you know your customer. I always tend to kind of ask one final question. And this is a question which you can certainly ask your client, and don't be afraid to ask this question, but also don't be afraid to ask yourself. If you had to lend the money yourself tomorrow, would you lend the money, Mr. Broker, or would you lend the money, Mr. Client? If you have reservations in lending the money to your client, or your client actually says, well, actually, I don't see why someone would lend to me, the question would be, why are you asking a lender to lend money to you if you're not comfortable with all of these acronyms that we've explained today? So hopefully that gives you a bit more underwriting understanding, a little bit more sense to what underwriters look for. Underwriters are not there to be difficult. They just are there to understand the story, and they need to understand the story through you, the broker. So hopefully, as I say, that gives you a bit more insight to where we're at. From a documentation point of view, I don't want to kind of labour the point too much, but one of my colleagues did do a poll recently to understand what brokers or how brokers deal with lenders' requirements. So 64% of the broking community want to get it right first time. So what I want to emphasize is the website that we have, the submission checklist that we have to allow you to go on day one with your client and ask for the relevant documentation, whether that be certified identification, whether it be a HMO license, or in fact, whether it's a pay slip. So again, I just want to emphasize, look at this website, look at the submission checklist, and get it right first time. Housekeeping documents, which is something that we can't avoid, declarations, direct debit mandates, and conveyancer and instruction forms, just so whether you want to instruct early from a time precious point of view, or whether you want us to use a specific solicitor, these forms are designed to help you and your client very early on in the stage. So hopefully that guys gives you a bit more insight to where we are at the moment.
Yeah, and just to jump in on that one as well, Elliot, we did have a question coming around kind of the templates which we use. So basically just going along the lines of what templates we use to avoid kind of having to repeat the information sort of on different cases and different avenues.
Good question. So from a documentation point of view, yes, every lender will have their own document requirements, their own forms. For one, it's a marketing or good piece of marketing to have branding on their own document. However, we do partner with a company called CoreLogic, which is a system in the industry used by a whole array of lenders who may help you to alleviate some of those documents. So for instance, what CoreLogic is designed to do is designed to allow you to upload your client's portfolio to the system. It then allows you to place that portfolio with various different lenders rather than having to manually input each property onto a specific lender's form. So again, there is documents, or there is means of kind of alleviating documents, and the link for CoreLogic is certainly available on our website, but also our sales team are there to help you sign up, understand what that system is designed to do as well, Liam.
Yeah, brilliant.
Fantastic. So guys, this is your chance to ask any questions that I haven't covered off today, or you want more answers to. So by all means, this is the opportunity, guys.
Yeah, Elliot, thanks. We did have Robin was commenting again that on the poll that you quoted, I know it was a LinkedIn poll, so it was a bit of a straw man sort of set of data there. But what were the other kind of percentages that came back? 67% you said wanted to get it right. 64%.
Good question. So 64% of the broking community say they want to get it right first time from a submission point of view. 29% say they just want to deal with it when the request comes in, so on an ad hoc basis. And we have 7% of the broking community just say they send every single thing that they equate from a client and send it to a lender. So there's pros and cons in doing that. Every document which goes to a lender, they have to look at. So there's pros and cons, but ultimately 64% want to get it right first time, which is positive.
We've had some more questions coming in, Liam. I'm sure you can see them down the chat there as well. But you did get a few in advance, didn't you, as well? So do you want to fly through some of these questions now? And like I said earlier, we can stay on for a bit longer if people are still interested. So if you have to leave, by all means go. But we'll stay here and answering these questions because it's great that we're getting so many in now. Over to you, Liam.
Yes, I mean, as Tim said, we had a fair few questions come through on the back of the invites being sent out. So the first one we had was basically around kind of the product fees for cases. So it was effectively, can the product fees be added when you've hit kind of that max LTV bracket? Good
question. So any product fees which are applicable to the product can certainly be added to the loan, which in essence will take it above the LTV threshold, which is fine. The most important aspect to that is the loan must be affordable. So in the calculation that you do for your client, the loan, including the product fee, must be affordable in its entirety.
Fantastic. And then just another one, which was around kind of the solicitors and the panel, which we have in place. So do you have a wide panel of solicitors which can be used, as other lenders seem to have kind of a limited panel in place?
Okay. In terms of the conveyancing approach that Zephyr takes, if your client is an individual type of customer, therefore not an SPV, the panel that we have is quite a vast panel, in excess of 100 firms on there at present, who can certainly act on a sole or dual basis. From the SPV type of client that we see, we have a slightly smaller panel, should we say, of 10 firms on there. Again, they are open to your dual or sole representation. I emphasize the engagement with those firms to clearly understand what the cost impact is going to be. The legal costs accrued through the conveyancing with Zephyr is the responsibility of the client, not the responsibility of Zephyr. Therefore, why we encourage engagement at an early stage to understand what that cost may be.
Brilliant. I'll just pick out a couple of questions which we had from the chat box. So there's one coming from Les Whitfield, which is basically when we have an SPV applying for a remortgage, where the directors have already had a benefit of an ILA purchase or previous remortgage, why would you require a fresh ILA every time? This becomes expensive but rather pointless.
Good question. Surrounding ILA forms specifically. So because each transaction of the property is separate, should we say, so we don't just kind of batch all the documentation together. The ILA becomes specific per property, per loan amount, should we say. And unfortunately, in the world that we're living in, and in terms of the transaction, that's what we're looking for. We're looking for the documentation to be standalone per application, per form. And unfortunately, it can become expensive, but we need to make sure that from all parties involved, everyone is aware of the transaction and is covered in every sense.
Fantastic. And then just a couple of more which have come through, Elliot. So one from Rakesh: would you accept a multi-unit block historical use without completion planning certificate, which was converted over 10 years ago, paying 2 separate council tax and separate utilities?
Right, from a multi-unit freehold type of property, so multiple units, what we need is that property, first and foremost, as you've touched upon, separate services, but we need all the required building warranties to make sure that property is sufficient from a safety point of view, from a lettable point of view, and the local authority is aware of what's happened to the property. So all works have need to be done. Works which may have not had prior consent, again, we just need to understand whether that has now gone beyond the time frames of having to generate those warranties. There might be instances where we may look at indemnities, but at the same time, we just need to be clear to exactly what works have happened on the property. And those type of scenarios, Liam, I emphasize, reach out to the telephone BDMs or the sales managers to understand more of the property and what has happened.
Fantastic. Thank you very much, Elliot. We have had a couple other questions come in, but obviously I am conscious of time as well. So any questions which haven't been answered by Elliot, even myself or a member of the team will reach out and get in contact with you in response to. I think we had a couple which we haven't had time to get through.
Fair enough. Okay, well, if you guys are going to get back to people separate, that's great. Yeah, just leave it for me to sort of point out that we have got a great, friendly and helpful team behind the scenes at Zephyr. Elliot and Liam, you've met today, but there are a group of other people that are available on the phones and sometimes out and about to answer any of your questions, and they will give you a quick answer, like you guys have seen today. You know, fire the questions through, get on the email, get on the phone, and speak to the guys, and they'll very quickly tell you if we can work with you on a case or not, or what you might need to do to get the case so it fits. You can find out all these details on our website, and we'll send them out afterwards on the email. So really, I just wanted to say thank you for your time today. We know you're very busy. Hope it was interesting. Hope it was useful. I'm going to now go and get a glass of Campari. Having seen that, that's what I fancy now. I think it's time. And really, just say thank you for your time. We hope you check out our website afterwards. Sign up to our emails. Follow us on LinkedIn. Keep in touch, and look out for the email coming from the marketing team later on today. Thank you very much.